Oil prices just doubled. The VIX is up 80% for the year. But here's what's wild. The thing clients are most afraid of right now isn't war. It's actually AI taking their jobs, and advisors have no idea what to say about it. All right, welcome back to another episode of the Financial Insight Show. I got my man Liam Hanlon here.
How you doing, sir? Good to be back.
Good. Good to be back. Well, there's no shortage of news. I thought what I would just start with real quickly as we're recording this early March 2026. Here's what the indices have been doing year to date. So I'm just going to punch through a couple of these. S&P 500 is now officially down 1.5% for the year. NASDAQ down 2.25%. All right, check this out though. I'm trying to think which one I should start with next. Bitcoin is down 22%. Gold, these next two are going to be big uppers. So gold is up 22%, which is kind of what we talked about in our last episode. They were supposed to be related, but they're not. But so I thought that was really crazy. And then VIX, the volatility index, which a lot of advisors and whoever uses kind of what's going on in the markets from a fear perspective, started the year at 15. Its current reading is 27. So the volatility index, the VIX is up 80% for the year.
Yeah, incredible. And no surprise, the VIX had been pretty steady for a long time. And now the market seems to be going through, at the beginning of this year, these ebb and flows, but it's ending up in the same place. It's going up 2%, down 2%. There used to be years, decades, where the market wouldn't ever move 2% in a day. And now it feels like every day the market's either starting up over 1% or down over 1%. The characteristics make it interesting, like the psychology of watching that money go up and down. It's different than it ever has been before. There's one price that I'm wondering if we also have on hand, which is the price of oil.
But yeah, and I did see crude was up to, I think, 90 now. And I'm not sure where we started the year, but that's got to be about a doubler, right?
I mean, in the last few weeks, because of the conflict going on in the Middle East, I believe oil prices, or the price of crude that is traded in the commodities market, is up quite a bit. I don't know. I guess let's look up the WTI, I think.
Yeah.
Oil crude it should be on NASDAQ. I think it's
Yeah, I have. So crude, I'm showing current price as we're recording this, $91
Wow.
a gallon. Started the year at like 58, something like that. So yeah, just about doubled for the year.
It's up 12% today. It's up 13% today. Yeah, if I look at a month even on this timeline, it's up. So most of its gains are, in the last few days, but it is up at least, 50% in the last month. Is that right?
Yeah, I mean, and that might even be in the last 5 days, actually, right? Like it's just right this week, essentially, from last Saturday when the U.S. did whatever.
Yes. It was flat for 6 months, like September leading up to March. It was sitting around $60 a barrel, or however it's measured, but $60 on the WTI. And now I think it is per barrel. And now it's 90. So it's up 50%. Yeah, in the last few weeks, obviously due to the conflict that's going on in the Middle East. And the other things that have shocked me is, since we last spoke, is down. Most of software in the SaaS category is down to 5-year lows, which is not indicative of the overall market, which hasn't moved. But the Mag 7, most of the Mag 7 and all of SaaS is down considerably. Not sure if you've seen that.
Yeah, I have seen that a little bit, and I see what you're saying, because even within the NASDAQ itself is down now 2.25% for the year. But like you said, it's these top kind of companies that are related to the software as a service, if you don't know what we're talking about when we say SaaS, but right. Yeah, it's these. So go ahead, tell us why. What's going on with the SaaS stocks?
Few things. Really all revolves around just this new wave of what is in the realm of possibility through technology like Claude Code. SaaS like Adobe and Salesforce and ServiceNow are the hardest hit right now, because everybody believes that their moat has disappeared. If you can create a design studio for free using Claude Code, why would you need Adobe? Why would you pay for an Adobe license for your entire Fortune 500 enterprise. And 97% of the Fortune 500s work with Adobe. I mean, they have Adobe enterprise licenses. So everybody's using this tech. Adobe's down to a 5-year low because they believe the moat's gone and that Adobe will either be vibe coded, I guess, by each individual or cheaper alternatives, or really what may happen is just margin compression. SaaS for the longest time was a high margin business, produced a ton of revenue at a very high margin because you were selling software, right? Which is an asset light business. Now, what they're saying is, well, if we can create the software and software has been cheaper and easier to create than ever, why are you charging us this amount of money for this thing that we could vibe code? So I think that's the real fear of the market, is that margins are going to be compressed and people are going to be less willing to pay for software as a service than ever before. And I think it's very dependent on the type of software. I don't see Adobe going anywhere. Right? The contracts they have with the Fortune 500s are very sticky, but it is causing quite a bit of fear with investors.
Yeah. I'll even just say this, just anecdotally. So, like, N of one, just one guy's experience. When I came out with the book, which came out last week, you know, there's all these little things. So I didn't use a publisher, I self-published, and there's all these little micro decisions that you have to make. One of them being, how do I design a cover? Right. And so, like, to your point, normally this would be something where I would have paid a person to do it. I would have paid a designer to do it. And then not only that, like, to make a Kindle book cover is fairly easy. And then people have been able to do that on ChatGPT for a couple of years now. But what most people don't realize is that when you're creating like a hardcover, I have them behind me, but a hardcover or a paperback cover, you actually have to create this PDF document. There's very specific, like, well, specifications to do it. And again, I was able to just upload the specifications file to to ChatGPT, and get it to just generate these covers for me. And it took some going back and forth. But again, this is just a single use case, right? Like to what you're saying. I mean, I'm just one person, but all of a sudden that takes out how many people were doing that as a job or using whatever software tool to do that with. And now it's like, okay, it's just part of my subscription.
Yeah. So when I was thinking about this, first of all, most of the news on this is very negative. Everybody's talking about this like we are entering into this dystopian doomsday. Have you seen the Citrini research paper? I don't know how to pronounce it. It's essentially like a creative writing piece. Did you come across this at all?
I don't think so. No.
Okay. So it's a research firm, Trini, Citrini. They wrote a piece, an analyst or an associate wrote a creative piece about if it's the year's 2030 or whatever, and we're looking back, what has the world become essentially because of AI? AI future coming to fruition, and they have all these predictions. It's conjecture, right? There's none of it is really founded in an evidence-based approach. Not to say that you have to. It's a very interesting read. I implore everybody to read it. But it's almost taking the worst case scenario across every event, that there will be mass layoffs due to AI, that, we almost as a society won't need 80% of the workers that we have today. The economy that the US runs off of will become obsolete. And there's other pieces in there, and I won't spoil the entire thing for those who haven't read it. But it got me wondering, because we have these two huge macroeconomic things happening in the world today. There is a real war going on in the Middle East, right? Let's call it a conflict right now. I think war might be inappropriate. But there is a conflict in the Middle East. The US is heavily involved. The price of oil is moving, obviously 50% over the last few weeks. It is up. That is indicative of us not having access to oil. So, like, the supply being cut off because of the resource's location being in the Middle East. Okay, that's real. That's happening. Then there's also this kind of happening, but mostly conjecture-based fear, which is AI is disrupting the world and it's going to take my job. This thing would exist without Iran and the Middle East conflict. So two, I'm going to say, are in isolation. I'm sure there's some crossover, but I wanted to quantify those fears. So I did a little research in advance of this. But if I were to ask you, in the last week, do you think that advisors and clients are talking more about AI's disruption on jobs and displacement, or Iran, the Middle East oil prices? Just
Yeah,
what's
I
your
mean, I
guess?
would say for sure the latter, the Iran and oil and what does this mean for me? That would be my guess.
Me too. I would have thought for sure, but it's not the case. In the last week, more people were talking about AI disrupting jobs. A great portion, actually. Through the research that I did, it was not quite a third, but over 20% of all conversations discussed AI's disruption of the job market and the future of AI. Whereas about, I'm going to say, less than it was less than 10%, in between 5 to 10% discussed the Middle East and Iran. So much lower than I would have thought. I thought everybody was going to be talking about this, but it seems that actual fear, or the more prevalent fear, is coming from the disruption of AI. Now, I have a follow-up question for you, which is
Okay.
the impact of these fears. So different fears have different impacts on our clients. I guess it's hard to ask you a question, but which of these, splitting them into three categories, the Middle East, oil prices, which is connected, but let's keep it separate, and then AI's disruption on the job market, which do you think would be the most impactful fear? And when I talk about impact, the impact is client sentiment being lower if it's talked about.
Okay. Yeah, I mean, it's interesting because really each of those are external, right? Like as clients and advisors, we don't have any control over any of those per se.
Yes.
Again, I mean, my gut reaction is that I guess it seems like oil prices would be the most tangible thing
Hmm.
because it's like I'm worried about maybe going to the pump and I'm gonna have to pay more. And
That's true.
that's like an actual cost that I have versus a war. I'm not worried about going to war. And I guess, but to kind of what you were just saying, I guess the AI thing could be personal. Like if it's legit someone that's like a computer software engineer or something like that, and I could see that being more relevant to them. But yeah, go ahead. What are the findings? I'm curious now.
So, if you're talking about the conflict in the Middle East and Iran, you're coming in to the conversation with much lower sentiment, right? Below neutrality. And we've changed our scale a little bit, but it's essentially what we've talked about in the past. It's below a 5 on our client sentiment index, which is neutral is 5. So, on average, those that are discussing the Middle East conflict, in Iran, are coming in with sentiments around 4.4, but they're leaving the calls with about a 7.3, which is important to understand. So 7.3 is above mildly positive on our scale. And we'll put it up on the screen for the viewers. Oil right now, because it's not that prevalent, it's not really impacting sentiment at all. I think we'll have to remeasure this next week because really all the gains have come from this week. And I only did my analysis on February. So we'll have to see the first week of March. But those that are discussing oil are coming in average, above average sentiment and leaving where they should. AI is interesting. They're coming in below neutral. So those who are talking about AI are coming into the call usually with this predisposed notion that they're going to talk about this. They're afraid of it. We actually see that clients are introducing this topic when AI is talked about. They're introducing the topic more than, or around 50% of the time. When they come in, they're a little bit below neutral, 4.8 on our 10-point scale, but they're only leaving at about a 7. So below the client sentiment index of those talking about the war. So those talking about the Middle East conflict are coming in lower, but leaving higher. Those talking about AI are coming in slightly higher, but leaving slightly lower, which means I think that even though the Middle East conflict is more alarming at first, once you talk about it with your advisor, I think you're overcoming it. Whereas advisors might not really have an answer to AI's disruption in the marketplace. The war is we've dealt with Middle East conflict our entire lives, and you can talk about that more than I can. But we've dealt with the Middle East. We've never dealt with a technology that could take all of our jobs. So I think it's a more prevalent and impactful fear. Let me hear your thoughts, though, if that makes sense.
Yeah, that is really interesting. And I feel like this isn't a political statement by any means, but it just seems like what we've seen in the news so far this year in terms of geopolitical tensions is that you almost have to rewind the clock. It's like at one point we went to Venezuela and we
Mm,
kidnapped their president.
right.
Right, like another weekend we went to Mexico. Another weekend we went to Iran. Like, so to some extent, I
Right.
wonder if, like, because the news cycle is quick, but also if that's almost like, I don't know what the right word is, but like we're almost numb to like, okay, sure. No, I agree that this one does feel different, right? This feels like a bigger thing. We're actually launching missiles. We didn't just nab a person in the middle of the night and bring him back, but yeah, but it is
I
interesting.
agree.
That's to me seems like that, but then the AI thing, I would not have guessed that people are seemingly not. So what is the takeaway again? They are benefiting from the conversation, but they're coming in more negative.
So those that come in with the fear, when AI is discussed, they're coming in slightly more positive to the conversation than those talking about the Middle East conflict. So they're entering into the conversation slightly more confident. But those that talk about and with their advisor the Middle East conflict versus AI, those that are actually talking about AI are leaving with lower sentiment. So they're moving less. The impact of the conversation with the advisor is reduced. Sentiment is not going up as much as it is even in conversations about potential war. So I think this really means is this fear that AI will disrupt not just the market but our jobs, displace us, is just more powerful right now. And advisors are dealing with it much more frequently in conversations right now about the Middle East and about oil or gas or prices, commodities. So they have to be ready to talk about it. Clients are bringing it up a lot, and nobody's really nailed the talk track. There is no answer. And so I want to throw this back at you because I don't have an answer, but I have a hypothesis. But how should advisors be talking about the unknown? If you don't have an answer, if you're my advisor, I'm 30 years old, I come to you with a fear of, hey, AI is about to take my job, and it probably will, by the way. What are you telling me? You can't say, no, it won't, because you don't know. And I don't trust that you would know that. I don't, you're not my tech expert, you're my financial expert. So, how do you as an advisor reframe the conversation to something positive in the unknown?
Yeah, I mean, I'm just trying to think back of like personal experience, and the closest thing I can think of is so I started as an advisor before the financial crisis of 2008, 2009. And think of this, I was I was an advisor within a bank,
Right.
right? So not only am I a financial advisor, but I'm within a bank, and the banks were the ones that were in a lot of trouble.
Hmm.
And so a lot of the clients that we had too actually owned stock of that bank. So it's a little bit different than what you're saying, but I did have clients that were also bank employees. And so that's what's making me think of this example. And for that situation, it was making sure that someone wasn't overly invested like twice.
Mm.
So, for example, if I had a bank employee, we wanted to make sure that they weren't over allocated in their portfolio to financial stocks, right? So, it kind of makes me think of that same thing. If somebody is nervous about a job category, it's kind of like what you were just talking about. Software stocks are getting hammered. Okay, well, if you work in software, you're already like your human capital is already invested in software stocks, whether you like it or not, right? So you probably should figure out a way to diversify that in your actual portfolio. That's the first thing that comes to mind is from like an investment perspective.
Yeah. Okay. Interesting. Yeah. I see, we saw in our research when we did the annual insight report that a foundation of planning, right? Going back to goals and planning. And I think that's really the only answer here is the only way to materially and consistently increase client sentiment. So instead of giving in and talking about, because clients are bringing this up a lot more than they often bring things up. They're really the drivers of macroeconomic fear-based conversations and assets like crypto, like gold, like oil. Clients will bring this up 50% of the time. Advisors, by the way, shouldn't bring it up. Most of the time, our research shows if you bring it up, you're worse off. But the clients are bringing it up. And I think from what I've seen in the research, it says that advisors should reframe the conversation to be about how your plan is set up to protect you no matter what happens. Like we set this plan up so that if AI takes over the world, yeah, you might not be like as good as, set up as you thought you were going to be, but you're protected from what most people are going to be exposed to, which is why you're paying for the advice and for the analysis and the recommendations. What do you think about that?
But it also makes me think about other things that we've talked about in the past about the importance of customization, right? Like if you're my client and I'm just saying, oh, whatever, Liam, we got your 60/40 portfolio. Don't worry about it. But if I'm, which maybe is even the case, is that everybody has the same portfolio. But at least if I'm like talking to you about your unique goals, your unique concerns, and then we're addressing those individually, I feel like that's where the client needs to feel that, and the advisor needs to be delivering that.
Yeah. Yeah, it's incredibly interesting, and it's coming at an odd time too. I think last year around this time, what we always see spike is income tax filing. If we have something in Jump called Global Trending Insights, where we look across, captured data, what's trending across all of the conversations. And of course, income tax filing is automatic contribution plans, home equity utilization, home owners insurance. These are topics that are always trending, but of course, income tax filing is now. My real question about oil, gas, rent, AI is the impacts that this has by taking away from the meaningful discussion. So you tell me, as an advisor, how many meetings do you have? If I'm your client, how many times are we doing like an hour-long meeting per year?
Yeah, so it might be 2 to 4.
Okay. But depending on the client and what they
Right.
want, essentially quarterly or
Yep.
biannually.
Yep.
And sometimes even annually, like a client review just once a year?
Yeah, absolutely. Yep. There's some clients that are more on autopilot, and that's for sure the case. Yeah.
So you get 1 to 3, 1 to 4 chances a year to talk with me for an hour. What percent of your revenue, like additional revenue, as in like recommendations you make that lead to revenue generating activities, do you think come from the meetings that you have with clients versus the client service you do on the outside, the emails, so on and so forth? But outside of the market just going up 10%, like what percent of the net new assets that you're capturing come from in meeting touch points?
Yeah. I mean, it's much stronger, I guess, right? That's where like a referral opportunity is likely going to
Yep.
show. And I think I know where you're going with this, but yeah, go ahead. I feel like you have a follow up or you have a path that you're going down.
I think that we don't realize as an industry how impactful these macroeconomic events are, not because of the reality of them coming to fruition, but because they're taking away from your opportunity to generate revenue for yourself and for your practice. You can't ask for a referral if you spend 45 minutes talking about the Middle East. It just
Right.
your opportunity to do so is taken away from you. The same goes for this time of year could be the most meaningful for a lot of advisors and their clients, especially as tax strategy, as we've seen, becomes more prevalent. You're doing your income file, everybody's doing their filing right now, and it could lead to high sentiment talking about, how this is taken off the client's plate. It's done. The outcome's good. But instead, we're spending 45 minutes talking about oil or Iran. And so instead of having that opportunity to ask for a referral, you're spending time talking me off of a ledge. So that's where my interest lies, is just the opportunity cost for advisors to talk about macroeconomic events. But what's
Yeah.
your you have to balance it, right? With well, we can't just ignore everything that's going on in the world.
Yeah, I mean, so I've said this a couple different times because like last year it was the tariff tantrum or whatever you want to call it was hit the markets in about this time of year. It was like April, something like that.
Yeah.
And we
Right.
recorded a podcast then. And my main takeaway then, it's always the same, is that an advisor should never miss a good down market as an opportunity. And I mean that sincerely. I mean, like last year, I was super busy around that same time doing Roth conversions. And when I talked to those same clients in the fall, they were like, that was great, right? Because they saw the impact of taking this, say IRA money that was going to be a tax liability. Now the market's down. We did some conversions. And then the whole way that math works out is as long as the market recuperates by the percentage that you paid in taxes, all of that is now free money, right? And it's like if you explain that and you say, look, this is a good opportunity, this is a good time to do it because the market's down,
Yes.
right? I feel like these are opportunities. So to some extent, I've always felt like even in 2008, I had I always joke it was a horrible time to start as an advisor. It was also probably the best time because people actually wanted to talk to me. I didn't have to call them when the market was hitting however many year highs and they're just like, whatever, I don't need any help right now.
Right.
Like they actually needed it. So again, I feel like I hear what you're saying in terms of like, you don't want to talk about Iran or AI,
Right.
but if you can pivot, right? I feel like that's the opportunity.
Well, that's the opportunity. I think you're right. It's turning each of these moments into a recommendation. And that's where I think people fall short is they'll talk about these things educationally or just conjecture, right? We're having this discussion about the how, why, or how, or what it means. And what it should really always turn into is an explicit recommendation about what we should do in order to protect ourselves or be better position, whatever. But it's your opportunity to make a strong recommendation that's often not seized. Our research would show that the more time you're spending on markets, investments, client service, the less recommendations you're making as an advisor. So that's the interesting dynamic is it exposes your best opportunities that we might not be seizing.
I agree. Yeah. It's key. It's the double-sided knife or whatever, the double-edged sword, right?
Yes, right.
It feels bad, but yet it's the opportunity. Well, this has been so much a great information, Liam. Thank you so much. And I feel like as we're going into yet another weekend of uncertainty, we'll have probably more things to talk about next week as well.
Yeah, things on my radar are AI in wealth, which is exploding right now. Anthropic announced a couple partnerships. Jump, obviously. We have some inside baseball. They may have announced a Series B, and there's a few others that are on the radar. So maybe we can discuss next week what the future of this category is.
Let's do it. Yeah. That should be the hook for next week then.
There you go. Of the future, the next evolution of AI and wealth.
There we go.
What
I
it
love it.
means for advisors.
I can't wait to listen.
All right, Eric.
All right. Thanks, Liam.